Hello, everybody. You have Matthew Daniel here with Funder One, also known as Ubets, becoming the #1 cryptocurrency hot in the market right now. Accompanied by the one and only, as usual, Mr. Said. How are you today?
Very good. How you doing?
I'm doing wonderful, wonderful. We have a lot of big news coming up again, as usual, with Ubets and where we're at. Before we get into some of those announcements, we wanted to make a video addressing some questions that we're having with new potential investors. So we wanted to make sure that we are being very clear and responsive to some of the inquiries that they're having. So
For
Said, if
sure.
you wouldn't mind, I'll go ahead and read some of these questions I've been coming across, and then me and you can do our best ability to answer them for them. How's that sound?
Well, before that, can you just give us an idea of where we are as far as the exchange about Probit? Maybe that will refresh everybody's memory to be updated on what's going on on the platform.
Yeah, no, absolutely. So, again, happy to announce we have officially listed on Probit. Probit, for those that aren't familiar with Probit, again, is a South Korean exchange. They do about 700 to 800 million dollars in daily volume. We have listed both Ether and Bitcoin pairings. As of September 17th tonight, we will start allowing trading and transactions happening on that
Yes, sir.
exchange. So as of yesterday, we started making our deposits. And for all of our existing coin holders and for all of our coin holders that have been sitting on the fence, everybody's kind of been waiting for us to open up in this exchange. So that's huge for us. And for those that are just hearing about us, and this is your first video with Ubets, we are also listed on Binance Dex as well. We've had significant growth in coin value, starting at $1 and now reaching up over $250 in value. So we're very, very, very happy with our accomplishment there. And again, that's only 2 stops with us so far, 2 exchanges. So we're going to continue the journey here, and it's very exciting Q4 2020 for us, and very much looking into the 2021 year here. So so yeah, let's get into some of these questions. How's that, Sid?
For sure, for sure.
So one of the main questions that was coming up would be more from some of our institutional, traditional type investors that we deal with all the time. And the question is, what makes us different as far as a cryptocurrency investment versus a traditional investment? How would you answer that, Said?
Well, there's a big difference because the traditional investment, when you invest in the mortgage-backed securities and any other type of mortgage-backed investment, it's different in the sense that there's a chance of you or as an investor not receive or only receive portion of your investment. Why? Because they have a foreclosure clause on the property. And if anything happened on the other side, which means anything happened with the family or the person, the property owner, and they end up foreclosing on that property, they usually tell the investors that that one a bad one. That was a bad investment, and the investors end up losing money. Okay. Now, mind you that the way this system is set up a little bit different. Now, it's the way they do it with the investors, basically. So on our platform, the way we do it, we have actually tokenized the property up front. We don't wait for 30 years to tokenize it. We want to wait until we sell the paper to tokenize. We tokenize it up front, which means if you were to go to the county recorders and look at the security agreement that actually recorded on that particular property, it shows that how many tokens that we actually created on that particular property. So everything is there. And it's the same information when you go up to blockchain, you can also see that information, which means you cannot miss, okay? You cannot say, well, I didn't know how much that you guys, how many tokens that you guys created on this particular property. No, it's there. And it's recorded. You can see it on at the county recorders where the property is located. Buyer can actually see it and the investor can actually see it. So we can tell the investors that they can receive the ROI or return on investment within 90 days up to a year, depending on how they want it. If they want it in cryptocurrency, they can get it in 90 days. And if they want cash, it can be within 6 months to a year. So it is upfront. There's nothing later, just like in any other type of finance that the banks do. They don't get paid later. The second that the banks receive the documents or the instruments, not documents, instruments from the buyer or the client, they actually endorse the note before they actually put it in the remit trust, they call it a remit trust, to create the mortgage-backed securities. So before they do that, they endorse it, and that's why I remember back in 2009 there was a meeting with the senators in the Senate, and they asked the CEO of AIG, how many times you leverage your papers? And the amount of time that he said was not correct. And the senator told him straight up, we know you're doing more. You do up to 50 times. So if you can leverage your instruments that many times, so now can you imagine how much money that the bank make?
Right.
And that's why they are able to do different things. You know, that's why we say ourselves, we do not reinvent the wheel, because we have the same type of instrument that our documents that the client sign, and that's how we are able to tokenize it, because the number or the amount has to be recorded or reported on that instrument and the client sign it. That's why we differentiate ourselves within with the other platform, the tokenization platform. Why? Because what they do, they tokenize the property and it's not recorded anywhere. Nobody can see what they did. So there's no limit. They can do whatever. But now, since we keep our platform straight up, we use the same quote unquote platform that the banks use to monetize the assets. So that's why it's pretty much fixed, because once we record that, that's what we record on at the county recorders, and that's the exact amount that we also record at the in blockchain. So that's the difference.
Yeah,
Which means the client or the investors, when they come in, they can get their funds or the return on investment within 90 days up to a year, depending on what they pick. If they pick cryptocurrency, we give them cryptocurrency in 90 days. If they pick the cash, now they have to go from six months to a year.
so everything as far as recording, investment coming in, everything is 100% transparent and utilizing the blockchain. That's one thing that the traditional markets, as far as real estate process, is very much not in the business of being transparent. So, and secondly, outside of being transparent, our priority is making sure that our investors are getting their return first. And again, that's important for all of our investors to know. And that brings us to our next question, which would be, I mentioned institutional investors have been very interested in joining what we're doing, but outside of institutions, said who else can participate in our investment?
Well, anybody can participate in our program when it comes to investing. If somebody has some funds and they want to invest it, and if they are in the crypto world, of course, because we anticipate our coin to go well over Bitcoin. Why we say that? Because we are, when we tokenize the property, we don't just use technology. Not only we have technology, but we don't just use technology because we have our real asset, okay, that we tokenize, which is can be a house or a car or both. You see, because we can do some kind of package. If you have a car, you have you want to buy a house, we can put all of them together and do the tokenization for you. Now, the tokens are recorded or registered on the house. You see, so it's real. It's not something that you can, okay, well, maybe no. We actually, in order for us to tokenize the property correctly, we have to use a certain format that the banks use, which the document that they call it truth in lending. That's the same platform that we use. We use that because that's the one that makes sense, you know, when it comes to financial. Because if you were to have a loan for 30 years, you know exactly how much it will be. So for that amount, if we say we're tokenize the property and not calculated based on those numbers, that's what they call guardian. Okay. Now, even though we know that the clients are not physically paying, but signing, creating the instruments for us, because by signing the instruments for us, they're actually creating the instrument for us. They are the creators. Okay. And just like for the banks say the same thing. The bank call the clients the trustors. You see? So now if you do trustor, you are the creator. You're the one that signed. Without your signature, the bank cannot do anything. It's the same thing with us. Without your signature, if the client doesn't sign the security agreement that we record at the county recorders, it doesn't exist. So that's the same thing. So once we get that, and that's the amount that we tokenize to make it real, because otherwise people will go crazy about tokenization. And we try to keep it within reason. So we have to follow somehow the financial system or the platform that they have already in play when the banks actually call it monetization. So we have to follow the same steps, which means we stay within reason. So basically that's what we do. And by doing that, that can pretty much in control when it comes to the investors and anybody else. Now, the investors, they can come from anywhere. It's just a matter of they let us know what it is that they want to do. And then they can consult with our attorney, and the attorney will go over what it is that they want to do, how they can do it, how they can participate, and then we'll go from there. Now, they can talk to us from the get-go for us to give them the basics of what it is that we do and how we do it. But now, if they are interested, they want to participate, they want to invest, now they have to go up to the attorney, and then the attorney can give them the rest of the information and contracts and everything else for them to participate. So there's no limit of, there's no, I don't want to say limit, but there's no restrictions, I should say. It's just that anybody who wants to participate as an investor, not a member, an investor, we can actually have a talk with them, and then we go from there. And then if, based on what we explain to them, they want to continue, we can actually pass them over to the attorney, and then they can move on and do what they need to do.
And so we've laid the business model out on the investment side to be very organic for different levels of investors, right? I mean, you have every level from we call them coin holders in the crypto space, but we can also look at them as investors because, in fact, they're supporting the Funder One business in the Ubets, so we treat them like investors, right? They're a part of the company. They believe in what we're doing, so. From a crypto perspective, anybody from around the world can participate. And that was a big reason for us getting on Binance DEX. Again, it's completely decentralized. So you can also trade any pair that you currently are holding in the crypto space into a BNB where you can purchase our coin there. And we've also made investment vehicles that allow investors to come in, as Seth was explaining, at multiple different levels. And for us to get any further into that, we would love to put you together with our attorney and how we can, how you can participate with us in your unique way. So that was important for us in structuring this business, because we understand there's all types of opportunity in real estate. We're doing something that nobody else is doing right now. So we wanted to be flexible there as we're doing something that's going to change and revolutionize the way real estate is.
Now,
Yeah.
there's one thing that in a conference, usually I tell people or tell the members, right? The theme that we have as Funder One and Ubets is for the people that they are investing in themselves. They're not investing in Ubets. Because the system that, as we know it, when you invest in the bank, or you invest in certain financial institutions, right? Now, for us, you invest in yourself. Why we call that as our theme is because when you invest in yourself, you don't want that to reap all the benefits, which means when we tokenize the property for you, we create liquidity for you, and then we eliminate the debt for you. You see that? So that's why at the end of the day, you end up with no debt. You see? So that's why we say you invest in yourself. It's just that us as Funder One and Ubets, we have the machine that can actually help you do that. Now, don't take it wrong, because we also make money. We do that for profit. It's a for-profit organization, and we're there to make money. And we do make money based on our structure. And the investors also, they make their money. There's no question there. But it's just that we have the vehicle that the client or the member can use to actually help them to get out of debt.
Yeah, which brings us into one of our next questions, which we touched base on, but is the process easy for someone to invest? And said you made that clear that there's two processes of investing. You can either get in touch with our attorney, where we can explain the different vehicles that we put together. From a standard investment, we're offering a 30% return within 90 days for our investors in Ubets. And then for which there is a minimum you have to come in to qualify for that, is going to be our baseline investment. As far as our coin holders, we are currently available again on both Probit and Binance Dex, where our price is continuing to grow every day. So please do take a look at our coins and get in now while you can. Our next question that looks like is coming along here is, what type of investments do we offer? Said you did touch base on those as well. We do provide a 30% return in Ubets as our standard investment. We also do a cash return on their investment as well, between 10 and 15%. But again, that's based on what your minimum investment is going to be looking at. And for us, we're looking at about 250K plus to start exercising that type of investment. Did you want to add anything there on the cash side, Sid?
Well, the way we have it in a way to benefit, again, the investor, okay, whether small or large investors. We make it easy for them to come in and they can see a great return. Now, the reason why we have it at 30% return right now is for early investors. Because as I just mentioned a few seconds ago, we expect Ubets to go well over Bitcoin. Now, just like anything else, when there's a large demand on something, of course the price will go up, and of course the amount on return will lessen, which means instead of 30%, right now we try to bring some investors in, at least to have them to come in and start, so we can start funding some of those projects that we have. We give them the opportunity to receive 30%. But now later on as we go, all those things will change. You see, but
Right.
right now that's what it is. Now, also for some investors, some of them want to receive cash. We always spoke with some of them. They say they rather have cash instead of having Ubets. And now we try to make it clear with them that we are dealing with cryptocurrency. So cryptocurrency is what we have, which means if they want dollars or yang or whatever form of money that they want, other than cryptocurrency, we can help them sell their cryptocurrency, and that's why it will take us a little bit longer to give them or their investment, including return on that investment. We say okay from 6 months to a year, because they have to give us time to do that. And we offer that opportunity to them also because, like I said, some investors already mentioned that. Say, well, in my case, I don't want to be on the platform or, every day they try to sell, or we don't want to jeopardize the system and all that. So we rather you guys handle everything for us and give us cash. And what are the terms? So that's why we came up with the 6 months to a year, depending on how much they receive. So we just try to satisfy the investors as they come, and at the same time to make it easy for them to come in and participate in our program.
Yeah, I mean, I think especially for the type of investors that we are drawing interest from. Again, this is, crypto's new for a lot of people, right? So they're not familiar with the process of, opening a wallet and, having Ubets or any type of crypto form in their wallet and what to do with it, how to trade it, put in sell orders. And as you said, we've extended our model that we can help participate in liquidating their funds for them as a service for them. So that is something, again, trying to, be with the times, go above and beyond for our group, business group and investors. And I hate to use the expression holding their hand, but in this case, yeah, holding their hand, because there's no handbook for this, right? There's nothing you're going to Google that shows people the whole process. So it's within our own, we feel it's our right to show everybody how the whole process works. So, and that's what we intend to do with all of our investors. So that's very important for people.
Well, there's another thing. Myself, I don't know why I feel like that about Satoshi, because for some reason I feel that Satoshi is a very smart man. Because again, he saw what's been happening over the years in the real estate market, and how there's a certain group that can actually control it. From time to time, you can see one just pop up, and that one pop up for, let's say, 4 or 5 years or 10 years, and then you mess it up. Perfect example. You have Countrywide. Countrywide came up in, I think, around 1989, 90s, around that area. No, they came out later. I don't remember exact year that they came out. But all of a sudden, they became the largest mortgage company in the United States. All of a sudden, just like that. Right? Yeah. And what did they do? They changed everything. After they changed the system to their liking, they make a lot of money and then dump it. And they took off. Everybody lost money, a lot of money, right? And then they're gone. Right. And right now, I mean, if you look at the economy, for example, it's basically the same thing that just happened, or it's happening right now. We don't know how long they're gonna hold on to it, but that's what just happened right now since 2008, 2009 with Amazon. And after Amazon, you have Uber that just came out and do the same thing. We don't know how far Uber gonna go. Now, not only they in the taxi business, now they're delivering food. They do all kind of stuff. You see, they disrupt all kind of economic or businesses, and then after they make so much money, or billions, or whatever that amount is, and then they dump it and keep on right on going. You
Yeah.
see?
Yeah.
Restaurants, you have Saks Fifth Avenue, you have all, I mean, Macy's that we know for, that been out there forever, J.C. Penney, all of them filing for bankruptcy. Why? It's because Amazon came in and took over with the retail business. You see?
Right.
Now, as you can see, the mortgage or the real estate market, nobody found out how to touch it because they didn't understand exactly how to work with the mortgage system and make it feasible for the people. Because as we can see, every 4 to 5 years, there's something going on within the real estate business. And that's what I believe Satoshi, as a banker, found out. You see?
Yeah, that's
So
the,
when he found out about it, he came up with Bitcoin and a smart contract. Because if you, anything that register in blockchain, you see, you cannot have any kind of, you can't hide anything in blockchain. You have to have that transparency. Everybody has to be able to see it if it's in blockchain. You see that? So he opened the door for us to see, hey, there's more to it than just having any type of project in blockchain. Just like they're saying, everything will be in blockchain or some type of blockchain, right? But now at the same time, when you see the real estate business, I mean, it's been in a position where nobody can fix it. And the banks control it. They make so much money with it every year, and they do whatever they want to do anytime they want.
yeah.
And at the end of the day, after they mess it up, the government comes in and bail them out. You see that? So, which is okay. But now we living in an era where we as a people, if we've been in the business, we see enough going on for the past few years, we should say, hey, there's a problem there. We cannot have foreclosure every 4 or 5 years. I mean, just like they claim that we're going to have an avalanche of foreclosures going on within the next couple of months. That's nonsense. I mean, think about it. You bought your house, you're 30 years old. You have to wait until you're 60 years old to pay the house off. Whereas you sign a note for the bank, which is okay because they have to make their money, right? Everything you don't want to sign. You don't want to create whatever it is for them. Just like I was talking to a banker not too long ago. I said, well, let's say, for example, we have Bank of America at the corner street right there on Wilshire Boulevard and so in Hollywood somewhere. And that branch, particular branch, nobody were to go to that branch for 6 months. What would happen to that branch?
Mm-hmm. It'd disappear, wouldn't they?
Huh?
Would they
They
disappear?
would have to close it down.
Yeah.
Because if we don't go to that branch and create for them, they don't have anything to sustain them.
Yeah.
Because every time we walk into that bank, we create something for them as long as we're doing business with them.
Yeah.
We are the creators. Without us, the people, nothing is created. Which means when they come to us and say they're going to give us a loan, that's a lie because the bank cannot give anything. In fact, the bank doesn't even exist. We exist. We are the one that's signing for.
Yeah. No, I mean, that's the part that, you know, that people, even myself, you know, have learned in this business with you said and sharing the model is how the bank system works in the mortgage business, you know, and again, we're not changing the way that they're doing it. We're just modifying it through.
No. We cannot. We don't want to do that. We're gonna leave them where they are. They can keep on doing what they're doing because it works for them.
Right.
But now, what I'm saying is now is time for us as a people to understand what's going on.
That's right.
You see that? Because I know there's a system, right? The system works. You see, but after a while, you have to learn how it works so we can make it work for you. That's why we say that you're gonna invest in yourself. You're not gonna invest in us. You
Right.
see? Because when you invest in in yourself, at the end of the day, after everything is done, you're gonna benefit from having that for signing for that house. Because that's your house. You see that? So
Yeah.
that's basically where we are.
Yeah. No, that's very informative, and we have two more questions here, and pretty straightforward one is how much are we looking to close on this next round, and for everybody
You mean
that
this round or the next one?
for this round that we're looking to close here shortly.
Okay. Now, basically, we're looking for, I mean, let's say, based on the investors that we're working with right now, they were to fund $21 million based on what we have on SEC. We registered, I mean, we listed on SEC. That will help us to fund around, let's say, 40 projects, you see, because we have projects from 250, 300 to $900,000. So that will help us to fund those projects. And the next round, probably the same, but it depends on how many investors that we have coming in and sign up and deliver the funds or the credit, not the funds really, but the credit to our attorney.
Right.
So by doing that, that will allow us to fund under maybe every 21 million, we can say around 40 different projects can be funded. And eventually things will change for us for the better. But for now, that's the way we have it.
Yeah, well, that's pretty amazing as we're just getting started. So, and the last question, which we're getting partially answered, a lot of investors are always looking, forward looking, and people are starting to look into 2021 as 2020 has been a very interesting year for all of us.
Challenging.
Yeah, challenging. But as far as our business model, we're going to be able to help a lot of people.
Yes, yes.
Not just new homeowners, but existing homeowners that are running into foreclosure issues. We're going to be able to help some of those people as well. But as the economy starts to rehabilitate and we move into 2021, where do you see Ubets, Q2 2021?
Well, one thing that we know that we're going to be able to do is creating a lot of jobs. Because by creating liquidity for the members, which means, I mean, mind you that we, the people, are consumer people. We consume stuff, right? Which means if we have extra money, of course, we're going to spend it, right? Providing that they get away with that COVID-19, right?
Yeah.
And that's one thing. They get away with the COVID-19 that will allow people to go back out there and consume stuff. I mean, if you look at technology, you see all new stuff coming out. What do you think people are going to do? If they have the extra money, that's what they're going to spend it. Which means the whole the ecosystem or the economy will make their money. The banks will make their money. We're not taking a penny from the banks.
Right.
We are not. That's not what we're doing. In fact, we are bettering what the banks are doing. Why? Because our members will have more liquidity to spend. Because if you right now, one of the major debt that you quote unquote that we have right now is your home. You see, your home range from, let's say, $1,500 to $10,000 a month. If you had that extra $1,500 to $2,000 or $10,000 a month to spend, guess what? That's a lot of stuff that you're gonna be buying. And that's why a lot of people you can win the lotto today, and within 5 years you can run out. Why? Because there's always something going on. If you were to buy a house and for whatever reason things don't go right, or you made some bad investment, you're gonna lose that house and you're gonna be broke. And there's no need for that because there's enough. The system can create a platform like this here, and I'm looking forward to see more platform like us doing the same thing. Why? Because there's enough for everybody. You see, it's just that right now, the way it works, only the banks are making the money. Only the banks. That's why they can go on and pull the plug whenever they feel like it. And that's why they call it, we have whatever issue that we have. All type of issues, just a way for them to pull the plug and bring people back. You see, let's say you had a home for 10 years, and for whatever reason, the business that you had or you have is not working anymore. Now you lose your business, you're gonna end up losing the house. If you lose the house, you're gonna end up being in an apartment or on the streets.
Yeah.
Whereas there's ways that we can do this. The banks still make their money because by tokenizing the property, we still make our money just like the banks would make their money on the property. We do the same thing, but it's just that when we tokenize it, we give the homeowner a chance to hold on to that house. Because if you help us as a platform to make money, the least that we can do, it gives you a chance to hold on to that property.
Yeah.
When you hold on to that property, it's not only just for you, for your kids, for grandkids, for your family. So when you retire, you don't have to be depending on Social Security. So this is a great thing. But now the way they have it, you can have money or making a lot of money in your 20s, 30s, 40s, and 50s. If anything happened after 50, you go down, you don't have no retirement money, you don't have nothing, you lose it all. Whereas it shouldn't be like that. A home, this is a right that we have to have a home to stay. Every single bank supposed to have that in heart. They know, they should know that. They're gonna be making their money, yes, because we the ones signing the documents or the instrument for them and give them the right to go and make the money.
Right.
They don't have to give us a penny out of it, but at least they need to clear that house. They have to clear the house so we can have a place to stay. Now, when it comes to investment, if you were to invest, you purchase a property as an investment, I don't care what they do to that investment. You see? But when it comes to the home for you to stay, I don't think the government should allow any bank, regardless, to touch somebody's house, knowing that the issue or the homeowner is the creator of those instruments that the bank's gonna have for 30 years collecting on them, because once they pull that note in that remit trust, you see, just like a soup, everything is melt in there. You cannot get it out. So regardless of what they say, whether they say that is a bad investment or not, it's not, because they're making money on it for 30 years. They need to leave everybody's house alone so people can have a place to stay. The bank can make, like I said, any amount of money, just like we do. We're gonna be making our money on the deal, on the transaction, because once we tokenize it, the token's gonna be out there selling. We're gonna make our money. But the chance that we give to every single member is to have a home to stay. And they don't have to to think about a foreclosure clause, because we do not have a foreclosure clause in our instruments, because we're creating something for them. That's why we say they are investing in themselves, not in us.
Yeah. Well, that's very powerful stuff, and definitely a game changer in this entire market of real estate. And look forward, said, to doing more videos like this where we can continue educating people on what we're doing. Again, at first, it can seem overwhelming, some of the things that we're doing in business, but as we start breaking it down segment by segment, people are going to start to realize how we've positioned our business model, how we've been transparent with our business model, how we create opportunities with our business model, and who is in our best interest in our business model, and that's the people. So that's very important for us to put out there. So I wanted to thank you for your time, Seth. We have answered all the main questions that have come through, and look forward to doing another video like this next week for everybody that's following us. Thank you very much for your time.
Thank you for having me.